Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. And in today's market, all the news is about RBL Bank. But before that, in the financial markets, the 10-year government bond yields are flat at 6.47%. And last week's government bond auction saw the RBI intervening, and they did not accept all the bids from the market participants in the auction, and instead they gave most of the bonds to the underwriters, who are the primary dealers and banks, and who for the 5-year bond, almost 78% of the auction was given back to the banks and underwriters, as the RBI felt that the bids for the yields are very high, too high for comfort. The 5-year bond gsec yield auction bid cutoff was at 5.83%, the highest in many multiple months. In the other markets, Sensex and equity, Sensex and Nifty were volatile, while the rupee ended flat. RBI has been selling US dollars to protect the currency from falling sharply. And in the global treasury bond market, US Treasury yields again rise to 1.5%, as news on the new Omicron strain of COVID is coming in. Is coming in that it's not as bad as the other Delta variant. But the most important here is today is the RBL Bank, which is a private sector bank, which saw the RBI appointing an additional director onto the board, and also the CEO, the current CEO, has gone on leave, and a new CEO who's part of the bank has been appointed in place of the old CEO, and this gives rise to a lot of speculation about what's happening in RBL Bank. RBI has come out with clarifications that there's nothing really too much worry about it. But given that there has been in the past RBI's intervention in Yes Bank, which was liquidated, in that Lakshmi Vilas Bank, again, which was liquidated, and in Dhanalakshmi Bank, all these give rise to worries about the health of the bank. And so this has a very detrimental effect to the AT1 bonds. As we all know, the perpetual bonds of Yes Bank was written off on liquidation, and investors lost a lot of money. And so in the perpetual bond market, the best private public sector bank, the SBI bond yields, are at 7.5%, because there's absolutely no worry about the SBI, given that it's the biggest PSU bank and it's government owned and is very healthy. While the private sector banks like South Indian Bank, their yields are at 11% and 13.8% respectively in the retail market, which shows that the risk in these bonds are very high, and RBL Bank issue may increase the risk in these bonds, as investors worry that there could be more issues in perpetual bonds from weaker private sector banks. Thank you very much for listening in. Do not forget to come and look at our Quick Invest platform for bonds, a digital platform for retail investors. We have a curated list which shows you exactly what kind of risk the bond is carrying. For example, perpetual bonds, especially the high yield ones, we have rated as higher risk, just to and give you all the risk that you need to know about perpetual bonds and other things, and also invest with the most information, transparency, and the ease of settlement processes. And if you have the link in the description below, will take you to Quick Invest. And if you have not already subscribed to our YouTube channel, please do so. Thank you very much.